Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Haven't done a video in a month. Let's take a look at some charts. I'm going to start with some volume stuff and some zoomed out metrics that essentially all conclude with things are very quiet right now, which for a long-term investor, capital allocator, is a great time to start looking at something that you haven't looked at, that you haven't been excited about, that you've said, oh, everyone's euphoric, I'm going to leave that alone. Well, now we're pretty close to the opposite of euphoric. Here's Google Trends for Bitcoin, past 5 years, essentially back to that pre-November breakout level as far as interest is concerned. And this is just an aggregation of, search interest, right? We can look at various different ways of measuring this, but ultimately most of these will show the same thing in that we are extremely low on interest, and you can do that with Ethereum as well. Same thing, basically back to that November 2020 level. And all these are going to look the same. If we look at volume, that's going to look the same. Volume back to that November 2020 level. Lots of people have been talking about this. This is all centralized exchanges. Most of this volume in general is probably junk, but we can look at the real volume on Masari, which is basically just a few exchanges, and also back to that November level. I'm just going to hand wave the volumes here and say that one of these is double counted and one of them isn't. That's not the point. The point is that the trend is extremely low, back to pre-bull market 2021, 2022 levels. Let's look at DEX volume, extremely low. I'll put all these links in the description of the video, by the way. Extremely low relative to where it was. I think most of this is bots. Most of this is wash volume. Again, I don't trust any volumes in crypto unless it's CME. Arguably, exchanges with fees are more trustworthy than not, but feeless exchanges, Binance had a feeless pairs for a little while. You just can't trust any of that volume. Point is here, it was declining DEX volume month over month, perked up a little bit, essentially flat, not quite back to that November 2020 level, but certainly down considerably. Let's talk about NFTs for a second, something that I couldn't care less about, but NFT mints on Ethereum, almost zero relative to where they were in peak bubble insanity, right? If you've never gone to the Blocks data source, they have some good data to just poke around and see what they have. But yeah, interesting here that, again, I don't see too many people talking about Ethereum NFTs per se. We can look at NFT volume, essentially back to the Stone Ages. I don't really count Blur as a real exchange, but if we just look at OpenSea, I don't even see people talking about selling ENS domains anymore. I don't see anything in regards to NFTs per se. We can look at ordinals, which have been like the soup du jour flavor of the month. Really kind of the only exciting thing that's happening. I think they're all scam, garbage, nonsense. But if you think you can get an edge in this market, that being NFTs, now's a good time to start playing around with them. If you were all about Ethereum NFTs and you have no clue how to do anything on the Bitcoin chain in this regard, probably a good time to start taking a look at this, because in a real deal bull market, these things will clog the chain. There will be insanity. You will see crazy stories. That's just going to happen. No doubt in my mind. So if you're an NFT enjoyer, I would check out what's going on the Bitcoin side of things. But even these are down. This is just a month-long trend here, but the excitement's waning slowly there. I'm not saying it's going to be gone. Not saying it's going to disappear forever. I'm just saying, look, the excitement's waning there as well. One silent thing on Ethereum as well is kind of interesting is eventually these inflows into staking are going to matter for price. Eventually. Everybody's looking at this saying, guys, look at all this money that's flowing into staking. And my response is always, and yet, price has done nothing. Price has been flat. Price has been down since Shanghai. Eventually, it will kick in. Eventually, right? We're not quite there yet. Maybe this has to 10x first. Maybe yields have to actually come down, which is maybe counterintuitive, but yields coming down on the staking side would mean that the inflows would be that much greater. Anyways, point is, this will eventually matter. Doesn't matter right now, but it will eventually matter. This has essentially gone parabolic as far as the validators are concerned after Shanghai. So even if you're bearish on ETH, generally like I am, this is the kind of thing I watch. because this is a lot of ETH that hasn't yet made an impact. Let's move on to technicals. If you are a, again, long-term capital allocator, investor, you don't care about the day-to-day, this is really the only technical chart you should ever look at, you should ever care about. The 4-year cycle, where are we relative to halving? And that's kind of it. That's all that really matters, because plus or minus a year from halving is really where you want to make your decisions, NFA, not financial advice. But because we are about a year away from halving, this should historically be closer to the bottom than the top. We can add some fancy TA stuff. Power law corridor on here. I have the 20-week and the 200-week. This is the 200-week here. We have a 20-200 bull cross coming up. At the end of the day, again, if you're just set it and forget it type of person, none of this should really matter to you other than where we are relative to halving. And you can say all the halvings are priced in forever. Great, love it. Don't care, right? The trend is your friend until the end. And so far, halvings have had a massive impact, not just on Bitcoin, but on the entire market. We can look at the 2-year moving average multiplier as well to maybe fine tune that a little bit and sort of get your value zones versus overbought. We're still kind of in that value area. We're kind of tipping down, which is worrying to me a little bit. But if we're flat a year after halving, then I'm more worried than I am now. This is nothing compared to expectation of post halving, where we've made highs for the past 3 halvings. Looking at the daily, this is where the trader hat goes on and the long-term capital allocator hat gets taken off. Looking at the daily, we did have a pretty ugly head and shoulders that I've talked about everywhere. We've got a cloud edge to edge that I've talked about everywhere. I'll look at that in a second. On the bullish side of things, what we have going on for us is being at this yearly pivot, surviving, being at the 200-week moving average, surviving, realistically holding within this pitchfork and surviving. Now, if this actually does mean revert to the midline, for me, that seals the deal on the strength and very high likelihood that this pitchfork is the real deal, and that when we see prices potentially back up in the maximum zone again, that'll be a be careful type moment. I also like that this does project 33K by July, but I don't want to see that trending on Twitter. Very much an if this then that. If we can maintain this pitchfork, it's going to be a slam dunk. Eventually we'll hit 33K. As long as we survive the yearly pivot, survive the 200-week moving average, it looks like things are going to be okay. But liquidity is so shallow right now, anything is possible. I think what we're seeing over the weekend, we're post-debt ceiling negotiation success, probably trying to margin call these shorters up here by breaking this horizontal level. I still lean more bearish than bullish in general, but I got to admit this does look pretty good at this level, holding above those supports. So it doesn't look terrible. The other problem here was the edge-to-edge trade, which didn't quite make it. It didn't even reach the 25.5, which would have been like the next highest level. Kind of odd considering liquidity is so poor. Maybe sentiment is just so bad, right? Volume is so zeroed out that nobody here even cares to short it anymore. I don't know. But if this thing can break the Kijun, that based on the cloud, then this trade idea is nullified. If it breaks the right shoulder, the head and shoulders idea is nullified. Lots of topsy-turvy random stuff going on because DXY is bullish. I'll get to that in a second. S&P is crazy bullish. NASDAQ is crazy bullish. And Nvidia is in euphoric mania nonsense territory, right? So maybe that hot ball of risk money flows into crypto and we just can't stay inversely correlated relative to the strength in legacy markets. Maybe that's how I justify this trade not playing out as expected. But the next thing to watch here would be a TK recross with price above cloud. That is the next trade setup, trade signal for go time on the long side of things, if you're watching the cloud. But it does look like that edge-to-edge move is in great peril here. And on the weekly, putting the long-term allocator hat back on, the marshmallow test, what you really want to see is price back above the weekly cloud. We have light years of eternity between where we are now and being back above the weekly cloud. Something else you'll notice that's always important, post-halving, post-halving, we've always been above the weekly cloud. And that ultimately has been just an amazing entry level, regardless of what's happening. In the grand scheme of things, here, and here have just been dynamite, right? You know, if you just trade that until whatever high that you're looking for based on some other TA, you're doing great. I do think there's a trade here to be made from around 30 to 42, something like that through the cloud, right? But that could be just as messy as it was in 2019, or it could be straightforward and we just sort of week over week march our way higher and eventually make it through. So that's still in the cards. That's a long-term, that's like a 6-month trade, right? That's into 2024. That's not tomorrow trade. Something else to watch for is euphoria once we get above the weekly cloud, if that happens. You know, it happened in 2019. It certainly happened in 2016, where everybody was super bullish leading to halving, and then halving happened, and then the Bitfinex hack happened, and there was a lot of despair. Again, didn't matter. Boom. Eventually we took off. Here we had COVID, right? Halving, right? Didn't matter. We had a massive pattern here as well, and then boom, we took off. So what we want to see to ultimately have just a crazy rally into 6 figures would be a no doubt about it slam dunk candle on the weekly time frame, price above cloud. This is all just peanuts compared to what those rallies have panned out to be. So near term, bearish to neutral, you know, long term, crazy bullish, plus or minus a year relative to halving for Bitcoin. For ETH, again, it's really done nothing. Okay, you know, you can be as bullish as you want on ETH. You can say I'm going to stake and get rich forever. I hope that's true, but right now, I guess, you know, not going down is a win if you're staking. Any dollar above above 1850 is a win if you're staking. Based on the cloud, what you'd want to see is, again, a TK cross with price above cloud, bullish TK cross. It's just been a very hot mess this entire range. Not looking at range stuff and just looking at pattern here, you could say ascending triangle, you could say Adam and Eve, you could say inverted head and shoulders, maybe. None of those are bearish, right? Just because this hasn't broken out yet and is a hot mess does not mean that this won't eventually break out, and then people will say, oh, well, obviously we have 4 million ETH inflows relative to staking, right? Instead of 2 million. Whatever the number is going to be, that's going to be the justification. So this still looks okay. Don't get me wrong, but it's been ugly, you know? And this may be a 2019 Bitcoin situation where it just sort of looked kind of gross for a long time and just popped, right? It's just a relative value trade here, right? Where's the opportunity cost relative to where you think Bitcoin's going or whatever else you're trading is going? I think in a basket of risk reward, there's a place for ETH because it does look pretty good on balance, high time frames, right? Low time frames, almost untradeable, but high time frames, it looks okay. Again, ETH relative to the weekly cloud, post Bitcoin halving now, it has done extremely well, right? So it is almost back above the weekly cloud, much like Bitcoin's weekly cloud, doesn't look much different. And we could see a run on ETH just like we do on Bitcoin, right? Generally, the two are coupled. They're the biggest 2 coins that anyone cares about outside of crypto. Realistically, the only 2 that matter. Almost every other chain is just trying to copy ETH, steal ETH users, developers, DeFi, right? It's all copy, paste, scaling, you know. Most everything else is just an ETH clone. It's Bitcoin, ETH, stable coins, right? What else is there? Scaling? Maybe. Layer 2s and 3s and 4s? Maybe. But long term, this is setting up to look great, just like Bitcoin. And maybe you also want to look at this weekly pitchfork if you are a long-term ETH person. What you don't want to see here is any lower lows. Obviously, you don't want to see this falling out of the pitchfork. That's when everything just dies as an idea collectively in crypto and Bitcoin. You know, that's when we have an issue industry-wide. But the expectation here, if you're just trading this pitchfork, is that this has got to start moving up pretty soon here. And if you're just measuring high to low, conservatively, 1618 to basically a double is 2600 to 3K. Reasonable level. The only reason I have anything above that on here is because I was looking at Nvidia. I'll get to that in a second, just to show you how ridiculous the Nvidia move has been. So ETH still looks okay long term. And, you know, we can look at other things long term, like this is the 1 year moving average multiplier. Looks okay. the high somewhere around 7,800. This will move around based on price. It's a moving average. But again, something else just to look at in the longer term. And then ETH BTC, I also think is generally untradeable. Basically flat. Nothing going on here. Probably worth putting an alert at like 0.08 and just forgetting about it. The only reason for me to trade ETH other than BTC directly would be some sort of setup on ETH that looks stronger than on Bitcoin, or some sort of rotation trade. They're both generally going to move about the same in my mind. And then looking at Bitcoin dominance, this is one reason not to trade alts, not to trade ETH, because dominance continues to get stronger. And I like 53 to 56% dominance as far as starting to look at alts as a rotation play at that point. In a vacuum, this thing looks crazy bullish, and it looks ready to make highs here. It doesn't look like ready to break down to me. So dominance looks great on the Bitcoin side of things. Let me talk about some legacy stuff for a minute. DXY, crazy strong, which is added to my crypto bearishness. It's coming off of a not so quite getting to 100 retest. It had a pretty nice bull div or hidden bull div there. And just a crazy 3 weeks off the Fed getting hawkish again based off of some PCE, core PCE numbers. And at this point, CPI is going to have to be negative before they turn a corner, because they're focusing on core PCE, which is slightly up month over month. Anyway, point is, Fed hawkish, Dixie strong relative to other currencies. If the Fed is hawkish here, the sentiment generally is dollar strong. When you have dollar strength, you usually don't have strength in risk, which is why this is a bit confusing for me. And just looking at dollar using the daily cloud, I mean, this looks phenomenal. Adam and Eve, W double bottom, daily cloud breakout, right? Everything here looks really good for the DXY. So that worries me on the crypto side of things. The question is, what's going to matter more? Dixie bullishness, S&P and NASDAQ, legacy bullishness, or crypto TA potential bullishness? You'd think DXY matters the most, but I guess we'll see. And S&P also looks insane to me. I've talked about this head and shoulders type of fractal, inverted head and shoulders type of fractal for a while now. It's got a bullish 5200 cross. It is above a potential diamond top on lower time frames. It is potential cup and handle territory here, measuring high to low, 4300 plus 44, 4500, right? Whatever this measures to. Survive the yearly pivot. It looks great. It looks exactly how you'd want anything to look when we're breaking out. I think 4040 is the level to watch. But again, it's a bit confusing that this is so bullish when DXY is also as bullish. And looking on the weekly cloud, again, phenomenal. This is an amazing trade setup, amazing entry. Almost 5 successive weeks above the cloud. Maybe you want to wait for the cloud to flip bullish here, but just based on TA, phenomenal. Almost always when you have that bullish breakout on the cloud, you do see some sort of chart pattern to back up that reversal, so that makes sense. And I was kind of messing around with pitchforks, and it doesn't look so great on the S&P, but you could argue based on midline, this midline and midline plus, this is a ways to go. It's early, doesn't look great. The downward pitchfork also wasn't great, kind of gave you some idea of what was going on. But anyway, something to just watch in the back burner there. The NASDAQ, okay, we're going to get successively bullish here, which is why I think it's going to be hard to be bearish crypto, because all this other stuff is just roofing like crazy. So NASDAQ also had a multi-month inverted head and shoulders, bullish cloud for many months now. It was working on a rising wedge, didn't matter, kept going, right? We may see some sort of like throwback retest of, 13K, whatever that is, but this measures to all-time high retest. I mean, this looks amazing. Does it look overbought? Sure. Does it look outside of reality? Probably, but if you look at what's holding up the S&P, it's actually most of what's in the NASDAQ. It's like the top 7 tech stocks holding everything up. And on a technical basis, you have a chart pattern breakout that really likes higher highs. Does this feel euphoric to me? Are we breaking out of a rising wedge upward? Yeah, that does feel a bit problematic, but that is a long-term target. So come Tuesday, after Memorial Day, It'd be interesting to see what we open on S&P and NASDAQ after this debt ceiling charade has sort of passed. Unlike the S&P, I do like the NASDAQ pitchfork because they sort of span the entirety of the pitchfork a couple times, hug the midline, and again, you can sort of see where you'd expect some resistance up here. So I do think this is one worth watching. And then there's Nvidia, which is just absolute insanity. Again, it had multi-month inverted head and shoulders with a Kumo breakout, whatever, cloud bullishness the entire time, right? Undoubtedly. This head and shoulders measured realistically at around 245 to 277. Okay. And you can see it broke the 2618, almost broke the 3618. That's how insane this pattern has been. Not only that, but it had a series of what I'd call rising wedges, which didn't matter. So maybe, just maybe, some of this money starts rotating around, right? And maybe some of the Nvidia fundamentalists, based on the numbers, taking profit, rotating around. I don't know. It's hopium, but crazy mania going on that side of things. It's crazy to see. This is the largest move in any equity in the history of anything. This is a $128 billion move, I think it was, on that day. And looking at Nvidia's pitchfork, the crazy thing is it may have a little bit more to go if it just hit the midline here. I'm just sort of fooling around with pitchforks, but the downward pitchfork looked great, and this pitchfork looks pretty good, which is kind of crazy to say, for higher on Nvidia. And just bringing it all back to Bitcoin, Bitcoin also had this inverted head and shoulders multi-month. We're still in the process of making a decision here on, let's say, a medium time frame, how bullish this is going to be. We kind of top ticked the 1618. The question is, like Nvidia, like potentially the NASDAQ, are we going to keep going and following other tech stuff with a rally higher? Well, let me know what you think in the comments. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.